Thanks, Allie. So again, thank you all for being here today to talk about this often challenging topic, understanding program insurance. I do want to mention that though we'll be talking about program insurance for primarily nonprofit organizations and programs, we are going to highlight some guidance regarding fiscally sponsored organizations as well. And with that, I want to really kind of begin our conversation today with one of our program partners, the Autism Mentorship Program. This is their story on their search for program insurance that the program leader, also the founder, executive director, Emily Goldberg. It gets a little confusing when I talk. It sounds like I'm talking about myself, but I can't take credit for AMP. That's all Emily Goldberg's hard work. But she's the founder, and she couldn't be with us today. She has a standing meeting, but really thought it was important to share a little bit of her story on her journey into finding program insurance. So with that, I'm going to kind of begin with a little bit of background with that. So AMP is a fiscally sponsored organization, not a 501c3 or nonprofit. And the Autism Mentorship Program, they were accustomed to being added to their fiscal sponsors insurance program for coverage. However, when they switched fiscal sponsors, the new sponsor told them that they were unable to provide insurance for them. Thus began their hunt for independent insurance coverage for an entity that not really an entity, but rather a ragtag group of individuals running on an online mentorship program. Again, these are Emily's words, her story. Challenging to say at the least. So I talked to a number of insurance company reps who all sent me back to our fiscal sponsor saying that they should cover. Round and round we went, but ultimately their insurance carrier said that unless their program was on their premises, they could not cover their program. So Emily reached out to us at Mentor Minnesota, who connected AMP with insurance companies who serve nonprofits, and some of them were stumped by the situation, but were offering different insurance coverages that didn't necessarily fit their needs. Finally, through some of these resources, they were connected to Matt Frank from Robertson, Ryan and Associates, who's here with us today. Matt not only understood what they were looking for, but was interested in what they do. He also advised them on what coverage they needed and was able to set them up with coverage quickly, just in the nick of time. So while Emily began the search for insurance coverage in June of 2022, they were finally insured the day before the program started. So again, and to that, Emily says, because she was really concerned about it, as were all of us, and wanting to make sure that they were able to get programming going, as they've been working really hard to get it done. So just kind of wanted to give you that background and what really led us to bring Matt's expertise, his wisdom, his kindness as well to all of you to learn a little bit more about insurance. What does it mean? Some 101s, and then be able to provide some really great resources for all of you. But with that, I think I know everybody on the call today, but if you'd be so kind to introduce yourself to Matt in the chat, if you'd be willing to share your name, pronouns, the role that you have within the mentoring space. So if you're a program leader or you're a mentor, and then what is one way that you uplift risk management with your organization or your program? So that might be maybe you're a volunteer intake process team member, or you're part of the screening, or perhaps you're part of monitoring the match that you oversee, whatever that might be. So I'm just really curious if you would be so kind to share in the chat, again, your name, your role, and then what do you do for, or what is your way that you uplift risk management? And while you do that, I'll quickly, for the sake of time, introduce Mentor Minnesota. And again, just feel free to go ahead and share that in the chat. But I'm Emily Garai, she, her. I'm the program director at Mentor Minnesota, and I sit along some incredible teammates. Sarah Schaefer, who is on the go right now, so she can't be with us, but Sarah is our executive director. Allie Ervig is our outreach coordinator, and our new amazing training director, Baswewe Gale. And so I know they'll probably be engaging in some conversations and questions as we go, but I'm really happy to sit alongside some really incredible people. So we at Mentor Minnesota, we're working hard to really fuel the quality and quantity of equitable and inclusive developmental relationships for Minnesota's young people. We know that safe and supportive relationships change outcomes for young people. And so we really want to be in all the spaces that they're in. So whether that's out in their communities, in the educational space, and out in the workplace. So really in all the spaces in between. So how do we do this? We do this in providing trainings, workshops, consulting services, and then also have a plethora of research and data-driven resources that we often share out. Some of those we'll be sharing with all of you today. But convening is a big part of our passion that we have, and knowing that we do better work when we all come together. And so that's where a lot of this Lunch and Learns is really providing a community of support and looking at it like, I hope that this is just me facilitating a really great conversation, and that you can learn a little bit along the way. So I'm curious to kind of ground this conversation, a couple of guiding questions. One is, why does program insurance matter? And then what are some questions that you have regarding programming insurance? And as you share just in the chat, or you can unmute, we'll try to get to your questions as we move along. And if we miss any or we were unable to get to those, we'll just make sure that we provide some follow-up and the wraparound that we'll send out from today as well. So I see some questions coming in or thoughts. Awesome, Jill, appreciate you. So, curious about going a little bit deeper into risk management throughout the aspects of programming. Absolutely. Yep. Thinking about that. What are we doing right now? And what do we want to maybe include or improve upon? Yeah. So kind of keep, thinking about this and add your questions. And really, in a nutshell, insurance can provide protection from damages, and Matt's going to talk about this today, but can protect from damages caused by bodily injury or property damage, for which your nonprofit or youth-serving organization is found to be legally liable. So having some proper insurance enables your organization to continue normal operations, right, while addressing claims. And also providing not only that risk management piece, but allows some peace of mind when you're working with groups of volunteers, your community coaches or your mentors, along with all of the young people that you're serving. So just a couple more things, kind of this, and then I'm going to hand the mic over to Matt after I introduce him. But after today, I'm going to be sharing a resource packet with all of you, and included in this is some recommendations from the National Mentoring Resource Center. And so there's a couple of spaces. There's all kinds of really great content within this resource for you. But a couple of things I wanted to highlight as we're talking about this. And these were a couple of recommendations that were highlighted in this risk management and youth safety component guideline. And one was to really, as programs or youth serving organizations, is to examine your current screening and youth safety practices. And then, and do this often and make necessary changes. So again, even if you have program insurance right now, I appreciate you still being on this call to look at maybe what are some other options or maybe spaces that there might be some gaps. And again, Matt can help lead us through that. And the other piece I wanted to highlight is that it's really important to be transparent with your insurers. So I know we saw a big shift from the pandemic from, going from all in-person programming to maybe some e-mentoring or online spaces. Some are in a different doing hybrid programming, but really being transparent with your insurance provider is also really important. And then that way to not only in the platform in which you provide programming, but then what else do you do as a program? What is your screening processes? What are your training, guidelines, all of those things, but being really transparent with your provider can be really helpful in the conversation as well. So with all of that, I'm excited to hand the mic over to Matt. But Matt joined Robertson, Ryan and Associates, one of Wisconsin's, so our neighbors. We love our Wisconsin neighbors as well. Even if you're a Packer fan, it's quite all right. Wisconsin's largest independent insurance agency in 2016. So one of Matt's main goals as an insurance advisor is to make the insurance process as seamless and painless as possible for his customers so that they can spend time and energy where it matters the most, with families, with their businesses, with their nonprofit interests, like many of you. Matt has a passion and years of experience in setting up insurance programs for nonprofits of all sizes. So no matter how big or small you are. Matt currently volunteers on the board for a local nonprofit community center for immigrants in Milwaukee, and he's served as a treasurer since they were founded in 2021. So as an independent insurance agent, Matt has access to leading insurance carriers for nonprofit and stands ready to serve their needs. Again, and I can attest to just his humility and kindness. And even though I am definitely not an insurance expert, I just felt good in talking to him about this. So again, happy that you could be here, Matt.
Yeah, well, thank you. Thank you. And yeah, I appreciate the opportunity to speak to everybody. I know insurance isn't the most exciting topic, but it is definitely something that everyone kind of needs to be thinking about, whether it's a for-profit business, a nonprofit, or even your home and auto insurance. Yeah, for me, it's definitely a passion working with nonprofits. It's kind of funny. I was thinking about it prior to this call, and with some business owners, dealing with them, they can be jerks sometimes. And I don't think I've ever run into a jerk working for a nonprofit when it comes to handling their insurance. So it's nice. And as Emily said, I'm on the board of a local nonprofit in Milwaukee, Community Center for Immigrants. We basically help green card holders go through the citizenship process. We do virtual classes to help prepare them for the citizenship exams. We just got DOJ accreditations. Now we can go out for the interview process, which is huge for us. And we're doing really well. Last year, we helped 100 people in the Milwaukee area become citizens. This year, we're on track to definitely outdo that. But I've witnessed firsthand what a lot of nonprofits go through from the beginning. Fundraising is not fun. It's a constant grind. It's something you always need to be doing. Thankfully, now that we're in the second, about to enter the third year cycle, it's become a lot easier knowing how to ask people. We also have had some really good wins on grants. We've gotten about $80,000 in grants over the last year. So for those, that get rejected from a grant, just keep your head up and keep going forward, because yeah, we've struck out a number of times, but we've definitely hit some home runs. But with that said, I was most of the insurance guy for our nonprofit, and I'll admit, the first year we didn't have directors and officers coverage. We didn't have general liability coverage. And I was okay with that, but eventually we got all that stuff in place. So, kind of my goal here is to at least educate you guys on what you guys should be, thinking about, looking at, and nonprofits grow, you change directions, you pivot from time to time, and you just want to make sure that you're keeping your insurance company and your insurance agent or broker up to date on that, to make sure that all avenues are covered. So if you could go to the next page, just quickly go over the agenda. So I want to kind of talk about the insurance policies, the exposures, and how we can cover that, and kind of where can you start. So the next page is just a little brief bio about me, which Emily kind of mentioned. So not sure if you guys are aware what the role of an independent insurance agent or broker does. We're kind of like the middleman between insurance companies and policy holders. I recommend for nonprofit insurance to go that route versus going direct. And the only reason is because we have a lot more access to carriers. So I personally have about 50 commercial lines insurance companies that I work with. Now, not all of them do nonprofits, but probably at least 15 of them do. And not all of them, of those 15, maybe some stay away from organizations working with the youth, but then there's a handful that do. So we just have a lot more carriers that we work with, which can help kind of fit your nonprofit's needs. So let's just jump into the fun stuff. So the different types of insurance, I just want to kind of briefly go over, and you might be aware of some of these, and some of them you might not be aware of. So the big one is directors and officers coverage, and arguably this is the top one or two most important coverages. And what directors and officers coverage is, you can go to the next slide. This protects your board and the officers, and it protects them against alleged acts, errors, omissions, misleading statements, breach of duty. And without directors and officers coverage, the officers face reputational and financial damage, and their personal assets can be at risk. So that's critical right there. So for the first year of me being on the board of my nonprofit, we didn't have D&O coverage. My personal assets were on the line. And most officers, directors and officers are aware of this, which is why they know what they're doing, always demand it, that they have it, because it protects them. $1 million is the starting point for the limit. That's kind of where most business, nonprofit, and for-profit business insurance liability limit starts. But higher limits are often needed for larger nonprofits, especially with high-profile board members and larger operations. If you have a bigger nonprofit where you have some CEOs or some very high net worth directors and officers on the board, you should really have $3 million or $5 million, and a lot of times they will require it. So it's just something to think about in the future. And the big thing is the personal assets are at risk. So a good claims example, you don't see as many claims with nonprofits as you do with for-profits, but a good example would be, say a donor gives you $50,000 and says, I want you to spend this money on youth education. And it could be something maybe even more targeted, like African-American youth education. You get $50,000 for that. And then when you're spending the money, maybe you only spend $10,000 of it towards African-American youth education, and maybe the other money where the nonprofit actually needs it. But then the donor gets upset that you misspent the money. That is a good example of where then they would demand that they get their $50,000 back. And obviously, hopefully it doesn't ever come to this, but the donor could file a lawsuit against the nonprofit. So the directors and officers coverage, what it does is it defends you, because the moment you hire attorneys, you're going to be spending a lot of money out of pocket, and the budget isn't going to be doing very well. So, thankfully with nonprofits, we see less claims, but it is critical that you protect the board members in the event that something does happen. And again, it could be alleged acts, errors, omissions, breach of duty, misspending the money. And on my side, when I see claims, not all of them are valid. Not all of them were because of an organization's negligence. It could just come down to whoever's suing you is just very litigious and very upset. So you just got to protect yourself and have defense coverage, which then rolls us into the next slide, which is general liability, which this goes hand in hand with directors and officers coverage in being the two most critical policies a nonprofit should have. General liability is pretty simple. It protects against bodily damage, bodily injury, and property damage. Slip and falls being a very common cause of loss. So with our nonprofit, we do a lot of virtual classes. There isn't, the slip and fall exposure, but every year, about 3 times a year, we do a big party in a park to celebrate the citizens becoming citizens. The park actually requires us to have insurance. They require us to show a certificate to rent out one of a building that they have. So if something were to happen there, a slip and fall, somebody gets hurt, maybe a kid gets hurt, we provide games, maybe a kid gets hit in the face with a baseball bat. That isn't really our issue. But if something does happen, we have protection. We have defense coverage to help us get out of it. Another big important thing about general liability insurance is if you're renting out a space, leases always require it. The landlords always require it. And then, with nonprofits, you're not going to be damaging much property, but in the event that we're at the park building and maybe we're grilling out and maybe somebody's not attentive and we accidentally cause a fire, that's where commercial general liability policy could come into play. Now, a lot of times people think general liability covers any liability exposure, which isn't true. Sexual abuse and molestation, directors and officers coverage, auto liability, professional liability are always excluded from these policies, which is why if there is an exposure, you need to make sure you purchase the rider or an endorsement or separate policy to cover that. So the next slide talks about professional liability and sexual misconduct, which can be critical for most nonprofits. Anytime an organization is providing professional services, counseling, medical treatment, training that kind of is more professionally focused, there is a professional exposure. So you need to make sure that that's covered. The most common professional liability policy that I see is for counseling. And that would basically be maybe one of the counselors provides some counseling to somebody and that person doesn't take it well and something happens because of that, and then they come back and say, well, the counseling didn't help. So that's where the defense coverage would come into play. Then the other critical thing is anytime you're dealing with the youth or at-risk individuals, sexual abuse coverage needs to be in place. And the big thing is you would hope that none of your volunteers, none of your mentors, none of your employees would ever sexually abuse somebody. And, you should be providing background checks, especially if they're providing, work with the youth. But it doesn't prevent somebody who is maybe just not in a great place in their lives, say a 12-year-old kid, from just making a comment to their parents saying, so-and-so did this to me. And let's pretend it never even happened. Well, if you're that parent, what are you thinking? You're thinking that your kid's not lying, and you're going to look into it. So we actually see that happen more often than somebody actually being sexually abused. It's just somebody hearing from their kid that something happened, and that's when it sparks an investigation, and then lawsuits can follow. So anytime you're dealing with the youth or any at-risk individuals, sexual abuse, molestation coverage should certainly be added to the policy. Then the next page is for property coverage. This is pretty similar. This is kind of similar to your homeowner's insurance policies or renter's insurance policy. If you have any building, if you have business, personal property, you should have a property policy. So from our nonprofit, we work virtually. We basically have a printer and a laptop. We are okay not having property coverage right now. But I have a lot of nonprofits that either own their own buildings or that are a tenant of a space, and they did like a really nice $200,000 build out for their office space. That's where you all of a sudden need to get property coverage. And lost income, business income can be covered in it. So say for us between November, December, our biggest donation period, if we did have an office space and there was a claim, a bad fire during those months, and we can trace lost donations to it, which in those months would be pretty easy because our staff are spending all the time trying to get set up and correct from the claim. If we can show that we had lost donations, that would also be covered. For smaller nonprofits or new nonprofits, this isn't something to be terribly concerned about unless you have a lot of property. But as the nonprofits grow and as their assets grow, this is something to definitely be considering. Then onto the next page is just auto insurance. And this applies to your personal auto or commercial auto. Always remember that insurance follows a vehicle and not a person. If I'm driving Emily's vehicle, we're going to a convention or something, and I'm in an accident in her vehicle, my insurance does not respond, her insurance responds. So that's critical, especially with nonprofits where you have volunteers. Now, that being said, if Emily's insurance wasn't sufficient, my insurance policy would come on the back end of it to protect me. But if the nonprofit has a vehicle titled to them, if they owned a vehicle, they definitely need auto insurance under a commercial auto policy. Something to consider is permissive use coverage. I could drive Emily's car as long as I have her permission. This is where it gets tricky with volunteers and employees using their own personal vehicles. The first thing you need to do is make sure that those volunteers and employees are good drivers. So a lot of times your insurance agent can run motor vehicle records to verify that Chris doesn't have a DUI, he doesn't have a bunch of speeding tickets and accidents, because clearly you're not going to want them driving, especially transporting people for your organization. So the MVRs kind of comes with the background checks. But then also make sure that they're aware, that the volunteer and employees are aware that your auto policy does not protect their personal liability or their totaled vehicle. That's kind of on them. They need to make sure that they have sufficient auto liability limits, which I always recommend the starting point being about 300,000. In the event where an organization has a lot of volunteers or employees using their personal vehicles, you can get hired and non-owned auto liability to protect the organization. And the critical thing there is non-owned auto liability. So going back to the example with fictitious Chris, if he was in a bad accident transporting maybe 2 students, his personal auto insurance is going to cover him. If he doesn't have adequate insurance, he's kind of going to be on the hook for that. But the attorneys will find out, oh, this was work related, and then they'll come after the nonprofit. So that's where non-owned auto liability protects the organization in the event an employee uses their personal vehicle and is in an accident, but it does not protect Chris. It only protects the employee. So that's where you also need to have a conversation with the volunteer or employees, if they are using their vehicles, to make sure that they're aware you aren't insured, you're not responsible for their vehicle or their personal liability. I would probably recommend staying away from transporting, having volunteers transport people in their own vehicles. That does get tricky because I know it happens quite frequently. But that's kind of where we're at. I see it with a lot of churches they'll have big shuttles for big field trips. And insurance companies are really starting to examine that exposure significantly, where somebody could be transporting 20 different people in the same shuttle or 20 kids in the same shuttle, just because of a catastrophic loss. So it does get tricky. If you ever have vehicles, make sure they're added to the policy. It's expensive to rent or to rent a bus with already a driver, but one of the benefits is you don't have to handle the insurance. If you guys do rent vehicles to shuttle people, make sure you have the right coverage. So that's kind of the auto insurance side of it. Then the workers' compensation. This is pretty straightforward. It protects if an employee is injured while working. These policies typically don't cover volunteers, which is why waivers are critical. The way that workers' compensation works is it's based on the payrolls, what you're paying them. There's a class code associated with the service that they do, and that kind of generates the premium. With nonprofits, it can be across the board. It really depends on the service you're providing. If it's clerical work, and it's only clerical work, that can be pretty cheap. But if you're like, I have a domestic violence shelter, which unfortunately the rates for that are about $9 per $100 of payroll. So with $500,000 in payroll, that becomes a very expensive policy pretty quickly. So generally you'll see this become one of the more expensive policies that you have on your insurance program, and it protects employees while they're getting injured. But again, volunteers, there's most of the time aren't covered. Then just some additional things to think about. Employment practices coverage, we're starting to see more and more claims for this. This is wrongful termination, discriminatory hiring or firing, failure to promote, sexual harassment in the workplace. The employer doesn't, and a lot of times I've seen it where the employer hasn't done anything wrong. They let go of somebody for valid reasons, but then that's when you'll see a claim come in and say, hey, so-and-so sexually harassed me or called me some names. The big part of the employment practices coverage, similar to the directors and officers and general liability, is it defends you. Hiring an attorney could be $300, $400 an hour. So this is a critical coverage to have if you have a large workforce. Then the big item here is cyber insurance. Every organization has this exposure. If you have medical information, if you have health, or not health, if you have personal information, social security, bank information, which you probably shouldn't have, this certainly increases the cyber liability aspect. Unfortunately, I've seen in the last 5 years, I've had about 6 businesses, and some of them being a nonprofit, get hacked. The most common thing that we're seeing right now is phishing, which is where they send you that fake email, your FedEx package has arrived. Everyone's like, I didn't order FedEx, but you're curious, you click it, and then next thing you know it, you downloaded a virus, and then they're encrypting your system. For smaller organizations, we're not seeing it a ton, but the nonprofit that I insure that got hit, they have 40 employees and they got hit twice in a 3-month span. And with that, they had a good amount of money. Really what the cyber criminal was trying to get to their money. Thankfully they didn't, but one of those cyber claims ended up paying $100,000. So large organizations definitely need this. If you're just, at the beginning phase of the nonprofit, this is something where, you can go without. But once you start having some critical information about your clients or people, it's something you need to have. And then on top of that is an umbrella policy, which just goes over your general liability and auto insurance. It wouldn't go over your directors and officers coverage. It wouldn't go over your employment practices or cyber. So you need to make sure that those policies have adequate limits. And that's actually a very common misconception. People think, oh, I got a $5 million umbrella. It goes over my cyber. It goes over my directors and officers. And the answer is no, it doesn't. Those policies are excluded from it. It only goes over your work comp, your general liability, and your auto insurance. So keep that in mind. Now, where do we start? Like I said earlier, being the treasurer of the nonprofit that I sit on, we didn't have insurance for a year. So don't feel guilty if you don't have some of these policies in place. Just keep in mind, this is stuff you're going to want to have going forward, especially once you start having certain exposures. With work comp, the moment you have employees, you need to have this, otherwise you get fined. But overall, my top 2 recommendations, if you don't have insurance right now, is to start thinking about directors and officers coverage and a basic general liability policy. And these aren't expensive, especially for newer nonprofits. This could be $400 to $500 annually for directors and officers coverage, and $500 to $700 for general liability. And then as your organization grows and the exposures grow, you add to it. But hopefully by that time you have enough fundraising and funds coming in and grants where you can help cover this expense. So now I just want to leave some time for any questions from any of you guys.
Yeah, feel free to go ahead and unmute. We're we're a small group today, so I'd love to hear from all of you, but I actually had a couple of questions. One that I hadn't really thought of until you started talking about um, sort of the location of programming, like where, you know, your center hub is. And we work with a program that has been provided a space, actually a couple of programs that have been given the space, like an in-kind donation from a community organization. So my question there too for them would be, or kind of thinking through their lens, you know, are they covered automatically with the organization's coverage that they have for that space? Or is this something that they should still have, even though it's been like an in-kind donation and they're, you know, really essentially renting a space, but for nothing?
Yeah, well, it's a good question. I say it quite often. No matter what, every organization, especially nonprofits, should have general liability insurance, because say they are at that space where the other organization owns that space, has insurance on it, and all of a sudden you're a guest and you bring your guests to that space and somebody gets hurt there. They might, how that would be handled is if you don't have insurance, that person would try to go after your partner who's offering that space. They would try to go after that insurance, but you could still be included in the lawsuit depending on what happened. And at that point, if you don't have insurance coverage, you don't have any defense coverage. I know a lot of times with those in-kind donations, I mean, we have a lot of organizations within our network offering, hey, if you ever need to use this space, feel free. We've taken them up on the offer. Our policy would extend coverage for while we're there. But if we don't have anything in place and somebody gets hurt, we are putting the nonprofit on the line. You know, and with nonprofits, you hope nothing ever bad happens. And it is a lower hazard, you know, especially with like slips and faults and stuff, but stuff does happen. So yeah, it's something you want, and it's something that other organization should probably be requiring too. It's just similar. It's no different than a landlord-tenant relationship in offering that space. They, you know, I see it. They want to see a certificate of insurance often. Does that help?
Yeah, no, that's great. Thank you. It's just, you know, I sometimes too, it feels like a lot and overwhelming, but it's nice to kind of break down just smaller pieces of it and at least engage with someone, yeah, that can kind of break it down into knowing. Because sometimes you don't know what you don't know, right? And insurance can be one of those spaces
Oh yeah.
where I think a lot of us, you know, we're in the space of service, right? And providing support for young people and the, you know, the adults that are supporting those young people as well. And sometimes it's a taken for granted thing or an assumption
Yeah.
um, that
And
they have coverage. Yeah.
unfortunately, I see that from time to time. Insurance is one of those things. Everybody hates it. You don't want to pay it. You're not having any claims. You're just, you know, spending money until you actually have a claim. And at that point, people wish they could buy that coverage if they had turned it down in the past. So, you know, it's something everybody needs. You hope you never use it. And oftentimes when people with certain frugal people, they don't buy the right coverage, they only find out the hard way when they actually, you know, how important that coverage is. So I saw Jill had a comment about insurance is on her mind right now because the insurer is requiring a workers' compensation audit. Those are always fun, and recommending cybersecurity assessment. So with workers' compensation, every policy gets audited annually. And that's just simply you provide your like quarterly payroll reports to the insurance company, and then they make sure that you're paying the right premium. So say if you had if you estimated $100,000 in payroll and that came out to be $2,000 in premium a year, they audit you every year. And instead of 100,000, you're actually at 150,000. Well, then you're going to be paying some additional premium for it. But then if the result of the audit is less than 100,000, which was estimated, say it's 50,000, then you're going to get a premium return. And a lot of times that's fine. The issue where workers' compensation can become a major thorn in everyone's side come audit is with classifications, especially with nonprofits where they do multiple services. And I can see Jill nodding because I see this unfortunately all the time. And you got to have a clear divided payrolls between classes, between employees. But sometimes you have an employee who wears many hats, right? And unfortunately, unless the payroll can be split between, say, just clerical and maybe in-person counseling, they're going to put the person at the highest rated code, which is unfortunate, but that's kind of how that works. And then for a lot of class codes, clerical just rolls right into certain classes. But it is something to be aware of. If you're going to get a work comp policy in place, you get audited every year. And sometimes the class code changes can be quite painful. It could mean you have to pay several thousand more dollars in insurance premium. So that's why getting the class code right the first time is critical, but sometimes it's hard, especially when an organization pivots or brings on a new service. It can be challenging. So generally we see a lot of in that event, if it's something we disagree on, that's where we dispute it with the auditor, and then we have them take a second look. And sometimes it goes even up to the state level where they send out somebody to review the operations, and then kind of what they say goes. But work comp audits can definitely be a little painful. Yeah. Jill, did you have any specific comments or questions on that?
Well, and I don't want to get too specific, but thanks so much for the information, Matt. Because I guess my follow-up question about classifications is, we really do all wear all the hats, and the classifications are so, even when you read the explanations of them, they don't really fit what we do. So I guess where can we find the best guidance in terms of getting those classifications correct? And where, can you split someone between classifications? Because that's really, we've got like 80% of the time, all of us are sitting at home on a computer doing all of our communication that way, but like maybe 20% of the time, between 10 and 20, we're out in the community, we're at events, we're meeting with clients. So
that gets really tricky to split it, and that becomes why work comp becomes a thorn in the side. For salary people, it's almost impossible. For hourly employees, that's where it's much more doable, because when they clock in, say on a Tuesday, they're only clocking in working remotely that day doing a clerical role, but then on Thursday they're going out in the field and you can actually track that. But with salaried employees, it's very difficult to kind of split how they operate. And we all know, sitting behind a keyboard at your dining room table, there's not a big work comp exposure there. So it's unfortunate when 80% of the time, that's the exposure, but then you end up paying for when you're outside the office. In terms of looking at the class codes, the auditors look at, it's called POS. I don't know what the acronym is for, but basically every class code has about a page or two description of what it is. And that's what the auditors look at. So for you, Joe, my advice would be to contact the auditor to ask them for the proof of the class codes, the descriptions, and they should be able to provide that if they haven't already done that. And then sometimes it takes a year or two to then start delegating certain employees for certain jobs. And then I've seen it where some of my nonprofits, they'll have a few employees just dedicated only to payroll or the clerical role, and they won't go out in the field. But that is hard when there's only so many employees, and that's where everyone kind of has to wear the same hat.
Yeah, I like that idea of reaching out to the auditor to get provided some, ahead of time to prepare.
Yeah.
I think that's good, good guidance there. I know Saviar, you had your hand up, I think, too, right?
Yes, thank you, Emily.
Yeah.
So, no, the question that I had was kind of touch a little bit on it, but I want to confirm, like, not confirm, but I want to know the difference between. So, for example, we have a building. It's a very old building. It's a big building, and we're planning on sharing spaces with other organizations, so they can like have, let's say, their events at our building. Is there a difference between these organizations coming and just utilizing the space in terms of insurance versus now the organization is actually have a contract with us where they rent our space for X amount of money?
Yeah.
So I just want to protect the organization, but also the folks that are coming into the building.
Yeah. So anytime you host people at your building, there you have a risk of that group and their guests, somebody getting hurt or causing damage to the building, but most importantly, getting hurt, slipping and falling is just a common one that we see. So in the event where you actually have a contract, like a lease agreement, if you become the landlord, they're the tenant. Every lease agreement should have insurance requirements in there. You want to make sure that they have liability insurance, that the lease also stipulates that they're responsible for insuring their own stuff, whether it's their build out, they put $10,000 into a new bathroom, or all their furniture. And most of your standard boilerplate leases all clarify that, because the last thing you want to have happen is the tenant saying, hey, there was a pipe burst, now I lost $50,000 of stuff, it's on you. Well, the way the good leases read is no, that's the tenant's responsibility. So you always want them, especially if there's a contract and they're a full-time tenant, to have insurance. Annually, you want to collect their certificate of insurance just to verify that they have liability insurance. Then for the case where you have people just coming on site, maybe just for a one event here, or maybe they're utilizing it every Wednesday, it kind of up to you. It depends what they're doing, what the situation is, but in theory, everybody should have insurance, right? That's just, in a perfect world, everyone has insurance. Then, you request a certificate when they're coming on site. But I will say, especially if you're trying to help a smaller organization, they might not have insurance. And that's where, I tell my clients, you got to be okay with making some exceptions. But if it's a big event, say they're having 100 people, you want to make sure they have insurance in case something happens. But if they're just having a small, say it's a nonprofit, they're having a board meeting there and there's just 4 people, that's something where I tell my client, don't make a big deal out of it. But and then it also comes down to what are they doing? I don't know, Xavier, if you guys have a kitchen, if they're utilizing your kitchen or something, that's where you'd want to make sure they have insurance. If there's, say, a playground or a swimming pool, you want to make sure that they have insurance. But if it's something as small as, just having a 3 or 4 person meeting and it's a newer organization, I wouldn't worry too much about it, because worst case scenario, one of their guests gets hurt there, your insurance will protect your organization. It won't protect them, but that's on them. You just need to make sure your organization's protected. Does that help?
It does help. Yeah, it's more of so let's say, we have this event, we want to include this organization and they're bringing 20 youth with them, and then we're going to have a bigger event that is our organization with their organization in our building type of thing.
Yep.
Awesome. Thank you very much.
Yeah. I saw the private question, how is property coverage handled with remote work? I know some renters insurance will cover that, but how does it work here? For example, working remote, having the work computer at home. Yeah, this is kind of new for all of us. Well, not all of us, but with the pandemic, everyone started working from home. Whether it's a for-profit business or a nonprofit, if it's a work issued computer and there's a fire there, if the organization has property insurance, it should cover that. if they have the right property extension. A lot of times there's coverage for property off premises up to like 25,000, which should be more than fine. The thing is, a lot of times the deductible is $1,000. So, you know, the computer might be $1,200. At that point, you don't file an insurance claim just because it's just not worth it. But if somebody did have larger amount of equipment, maybe they have a server at their house that is the organization server, you know, it's $25,000 of equipment, you want to make sure that's covered. But in theory, if it's the nonprofit, if it's their equipment, if they have a property policy, you should just verify that on the property extension there's a little bit of coverage offsite. That should be more than enough. At the same time, you know, I have clients with 300 employees offsite. Well, they're okay with the spread of risk because it's, you know, they're not going to have a catastrophic loss with it. Then, so that answers that on property. Work comp, people can still get hurt at home. I will say when I've seen those claims come in, they are scrutinized under a microscope just to verify that it was work related. Just because it would be really easy for you to fall off your ladder trying to clean the gutters and then try to say, oh, you got out of your seat and slipped too quickly. But you know, most people are good people and we don't see that. Liability can extend to remote work as well. So hopefully that answers that. Any other questions? Oh, I see Jill asked about independent contractors.
Perfect, thanks.
Yeah, so question, do any of the policies you mentioned covered independent contractors? We are being asked for certificates of insurance, certificates of coverage from our independent contractors. For example, the individuals who conduct the detailed screening interviews on our mentor candidates are independently contracted. Okay. So the first thing is with independent contractors, you want to make sure that they have their own insurance, and they a lot of times want you to have your own insurance. With workers' compensation, if you were to hire an independent contractor and you don't have work comp coverage and they don't have work comp coverage and they get hurt while working for you, it could roll up and hit your organization. So that's also why you want work comp coverage, because if an independent contractor who didn't have work comp insurance gets hurt, then it could fall under your work comp coverage. It's the same as if I were to hire a roofer at my house and I didn't verify that they have insurance and that roofer falls off the roof, my homeowner's liability insurance could respond to that. So that's on like the work comp side. The liability side, Jill, who's asking for the insurance? They're asking it from you?
So we're being asked, the workers' comp audit is asking for it, but actually our insurer is also asking for it. So I think we're actually being asked for certificates of both workers' comp coverage and liability coverage. And these are just individuals who have a psychology background where this is something that they just do like on such a limited basis, they won't have, like, I'm sure that they won't have coverage.
Yeah, and that
it's a sideline for them.
Yeah, it really gets tricky, especially with the people just starting off working for themselves, being an independent contractor, because it's attractive for you guys because you don't have to make them employees and you get their services, especially when it's a part-time basis. So with the work comp, any independent contractors you hire that don't have their own work comp insurance can fall under your work comp under the audit, and then you'll get their payroll would fall under your work comp premium. It's hard when you're just starting. You do always want to see if they have certificates of insurance and then start collecting them, because like I said with that roofer example, if they don't have insurance, or if your independent contractor doesn't have insurance and gets hurt while working for you guys, your work comp policy could respond to it. And that's why your insurance company is asking for certificates of insurance. And then if you can't provide them, there's a good chance that whatever you paid them will fall under your work comp policy, because if they were hurt, they would that policy would respond. The liability side of it too is also tricky. I mean, if you have somebody doing, so I have a nonprofit, I have a homeless shelter. And now they're going to start lead testing, but they're not going to be doing the lead testing. They're actually bringing in Children's Hospital and their nurses to do the finger prick lead testing and then the testing from there. We have now, the insurance company wants my client to make sure they're collecting certificates of insurance from Children's Hospital, which makes sense because what if, you know, the Children's Hospital nurses are providing a medical service. If something were to happen, while our policy potentially could respond, they are the ones who really should be covering it. So that's where we had to provide certificates of insurance or collect them. But it's hard with some of the one-offs where you just have somebody working 10 hours here, 20 hours there. And it's kind of hard to go around that. It's something you just need to be ready for on your work comp audit. But if anybody's providing any professional skills, you definitely want to make sure you're collecting insurance from them. And a lot of times it's a good way to vet people out. Like, I would never hire a roofer if they didn't have a certificate of insurance to show me, right? But it is hard when they're small.
No, that's so good. And I think we could keep the questions coming for you, Matt. So
Yeah.
I have shared, and I'll share with all of you again in a wraparound Matt's information so you know how to get a hold of him. And I would highly recommend that you do that. He's super responsive and helpful. So again, we just really appreciate your time and being with us today,
Definitely.
Matt. And again, just uplifting things for us to think about. And I know for all of our programs to have even a jumping off point and someone to talk to and to ask questions, and even get coverage for has been really important. So we don't, you know, as Emily Goldberg said, you know, it felt like finding a needle in the haystack. So we just appreciate you for being here with all of us.
Well, I'm happy to help, and thanks for giving me the opportunity to present.
Yeah, for sure. And I'll make sure everybody gets the resource packet. I know a few people had to bounce to a 1 o'clock meeting, but
Yeah.
again, appreciate you.
Yeah, definitely. You guys have a great day.